Two Fed presidents have just sold their individual stocks. By September 30th, they will have sold all of their individual stocks, and they will have moved either into cash or passive investing vehicles. Today, I will discuss this in an article that really discusses this in more detail. I'll give my thoughts on this and whether this really is the Fed signaling that there is something big coming that they know about and that they are protecting themselves from, or whether this is something that really is just noise out there and we can basically ignore. So I'll get into this article from Reuters now. Okay, trading tantrum. Fed officials' personal dealings stir controversy and call for change. Media reports this week that two of the Federal Reserve's 12 regional bank presidents were active traders, has some of the central bank's most vocal critics questioning the rules that allowed them to engage in the transactions in the first place. Dallas Fed President Robert Kaplan and Boston Fed President Eric Rosengren made frequent or substantial trades in 2020, the Wall Street Journal and Bloomberg reported earlier this week. The trades occurred during a year in which the central bank took major actions to shore up the economy and swooning financial markets after they were broadsided by the coronavirus pandemic. While the trades were permitted under the federal system's ethics guidelines, their disclosure prompted some observers and a top lawmaker to flag possible conflicts of interest. Forget about the individual trades, said Benjamin Duchlin, director of the Fed Up campaign at the Center for Popular Democracy, a group that advocates for the Fed to focus more on the needs of American workers. The issue is that a president of a Fed bank, one of the handful of people who set our country's monetary policy, so clearly has his personal interests aligned with the success of our biggest corporations. On Thursday, Kaplan and Rosengren said in separate statements that their trades complied with the Fed's ethics rules. They also said they would change their investment practices to address even the appearance of a conflict of interest and sell all individual stock holdings by September 30th, 2021, moving the proceeds into cash or passive invested index funds. Both Kaplan and Rosengren said they would not trade on those accounts as long as they are serving as Fed presidents. So, for some reason, it was allowed in the past in 2020, but they're deciding not to anymore. That sounds a bit suspicious to me. The changes came after they both faced criticism for transactions made last year, dealings that were first reported by the Wall Street Journal this week. Each has since made his annual financial disclosures public. The documents show that Kaplan, for instance, bought and sold at least $18 million in individual stocks in 2020, mostly tech stocks like Apple and Amazon, and energy stocks like Marathon Petroleum. All of those transactions were reviewed by the Dallas Fed General Counsel, said Dallas Fed spokesman James Hoard. Rosengren, who has publicly shared concerns about potential overvaluation risks in the commercial real estate sector, held stakes in 4 real estate investment trusts and made other investment trades, as highlighted by a Bloomberg report. Regrettably, the appearance of such permissible personal investment decisions has generated some questions, so I have made the decision to divest these assets to underscore my commitment to Fed ethics guidelines, Rosengren said in a statement on Thursday. And basically, there's a lot of calls for greater oversight for the Fed, that this sort of mixed interest should have never happened in the first place. And yes, I do agree with a lot of what is said here. I do actually agree with what Elizabeth Warren says at the end here. I just think it's a complete hypocrisy if government officials or members of Congress or the Fed, which this article is referring to, but none of these people who have this inside information should be allowed to trade stocks, because they're no dummies. They know how this is going to affect the markets or individual stocks. So in my opinion, this is a complete, avoided topic here. This should not have come about. So one thing that I would point out that is important, and why this could, be an argument for the Fed and for, them being honest about this is the fact that the Fed has to maintain trust by the general public. They have to maintain trust. This is the only thing that really is continuing this everything bubble at this point. Because if people, by and large, were to start changing their mindset, if they were to actually realize that fundamentally this cannot go on forever and that this is actually getting very close to the end of this illusion of everything actually being valued at much more than it should be. Once that trust goes away, the Fed really has no more control over people, and they would have nothing more else to do to keep the asset prices pumped up as much as they are. And for those of you who might be a little skeptical of this view, I'll just explain that basically the Fed right now is trying to convince everybody that, oh, the inflation you're seeing in everyday prices and everything out there, houses going up in value, 30 or 40% in the last 2 years, that's somehow transitory, and that wages going up, from $12 an hour, now even, starting at $20 an hour in some cases, oh, that's somehow transitory. No, that is not transitory. Wage inflation is definitely not transitory. It's not. Once you get the genie out of that bottle, there's basically no putting it back. So inflation is definitely not transitory, as the Fed is trying so hard to get people to believe. And once people begin to, broadly speaking, realize that inflation is here to stay and it's really going to only accelerate from here, once that occurs, I would argue that people would be much more cautious with regards to purchasing housing at this price. They would be much more cautious about keeping their money in the stock market right now. So that would probably be the beginning of the end. So in my mind, that's kind of an argument for the Fed's case of being transparent and actually not, trading in advance of some tightening or tapering that they are going to do later this month that they know about and that we don't know about. On the other hand, I don't put anything past the Fed at this point. I really have nothing good to say about them and the whole central banking system as a whole. I think the world would be a much better place had the whole thing never come about. That's just the Austrian economic side of me, of course. Obviously, now that this system is in place, you kind of have to make the best use of it. You have to, deal with it as it is. But on the other hand, I really have nothing positive to say about the Fed. If they were really going to taper their asset purchases, if they were going to tighten and they, knew that this collapse was coming, I wouldn't put it past them to actually, protect their own wealth and not be transparent about that. So all this being said, I think it's up to you to decide for yourself whether the Fed is being transparent or whether they are actually signaling that, they're going to start doing some serious tapering and tightening that they did not think would come this early, but that they are now realizing has to come due to much higher than expected inflation. So all of this being said, I wish I could give a more concrete answer as to whether I think that this is, something one way or the other, but I do think that it's kind of a 50-50 at this chance in terms of my mind. I don't know for myself either. So all of that being said, I'd like to hear your guys' comments about this question. You can leave them down in the comment section below, and I hope to see you again at some point.